Okay, guys, welcome to Libertas Trading and welcome to the week ahead preview for the week commencing the 3rd of November 2025. So, just a quick heads up, the purpose of these videos is just to get a quick snapshot of what we have coming up and to talk briefly about what I'll be looking at to trade. So, it's just an overview of the week ahead. It's nothing too deep. We'll be doing that in the event previews. All the event previews will be released closer to the time. They'll be filled with all my data, the macro picture, precise trade plans, looking at the exact way that I'm looking at trading these prints. But the week ahead video is just a bit of an overview. If there's any recommendations for future week ahead videos or any little tips or advice you want to give me, please feel free to message. I'm always open to suggestions. My DM on Substack's always open. So yeah, feel free for any recommendations. Let's crack on. So Monday we've got Swiss inflation at 7:30, something that in the past I've been a massive fan of trading, but recently just hasn't been moving markets much. So I think the next meeting's on the 11th of December. We've got barely anything priced in. I think there's a basis point of cuts priced in. Inflation's expected tomorrow to be at 0.3%, which is well within the Swiss National Bank's 0 to 2% target range. And mainly just how the data's been reacting the last few prints. So we'll quickly look at that now just to show you how disappointing the reactions have been. So just looking at the July print, bit of a chop fest here at the start. We did move down half an hour after the data to completely reverse again. So, I wouldn't be completely averse to taking some scalps on this, but for me, the way it's been moving, we had like deviations here above the max. We printed 0.2% above the monthly and the yearly expectations here. So, it was a fairly good print, but the reactions just weren't too great, to be fair. That's also the same for the May print if we quickly drag that one up. So yeah, again, the May print, we printed well below, well, not well below, but we printed below the minimum expectations. We printed 0.2% below market consensus on the monthly and the yearly, which is what I usually look for a trade on the Swiss inflation print. But we sort of peaked at 4 minutes and we ended up completely reversing and just had a bit of a chop fest. So at the moment, inflation and central bank policy is not the main driver for the Swiss franc. So will I trade this one? Potentially. If I do, I'll be cutting my risk right back. I'll be looking for 0.2% deviations on the yearly. Just going back to the calendar quickly. We've got 0.3% expected. We've got a low of 0.2 and a max expectation of 0.4. So, for any scalp, I will be looking for 0.1 or lower for a sell on the Swiss franc and 0.5 or higher for a buy on the Swiss franc. But yeah, I'll be cutting risk right back. I'll only be scalping the data. I'll be sticking to euro franc or pound or dollar franc, sorry. And it's purely going to be a scalp. I won't be holding on to anything for longer than about 5 minutes. So yeah, I won't be doing a preview for this one. It's nothing I'm too excited about. So probably be swerving it, depend on how I feel in the morning. But if you do want to trade it, I'd be looking for 0.1 or lower or 0.5 or higher on the year on year. So going into Monday afternoon, we've got ISM manufacturing. So not always the best mover, but with the US government shutdown, markets are sort of gagging for any sort of economic data on the US at the moment. So even though this is a survey print, it's very recent. It's numbers for October. We're in, is it the 3rd of November tomorrow? So very, very, up-to-date data. And it could be quite decent. The only issue is, of course, firstly, it's manufacturing data, which only makes up about 17% of the US economy. And secondly, we need all four things to align in an ideal scenario. So, just looking at the previous prints for the ISM manufacturing, you can see that, it's pretty hard to get all the stars to align. So this was last month's print, completely mixed. In September, we had new orders amazing and the rest came in weak. Same again in August. July was completely mixed. June was a nothing burger. May, we had quite a nice print and, this was tradable, but again, it wasn't amazing. So, ISM manufacturing can be good and it can be a decent mover on tomorrow, but we do need all the stars to align. In an ideal scenario, we do need all four things aligning. So I will be doing a preview for this. There is a chance of trading a stagflation or a Goldilocks print for equities as well, but we'll talk about that more in the preview for it tomorrow. So just heading back to the calendar, we've got the RBA Tuesday morning at 3:30 GMT. So Just to be clear, I'm not a massive fan of trading central bank events. Unless there's a clear opportunity they're shouting out to me, I usually avoid them. I stick in my lane on this one. I'm good with data, but with central bank events, it's not really my forte. So, there are certain times where I will trade, if we've got like a 50-50 to 50-50 call on the rates, or, something that could be interesting. But for the RBA tomorrow, or Tuesday, sorry, it's 3:30 in the morning, 4:30 my time. I think there's 1 basis point priced in. It's not something I'm waking up for, so I'll be giving that one a swerve. Now, just scrolling down to Tuesday afternoon, we've got Jolts. I think, yes, we've got Jolts. I'm pretty sure Jolts is BLS data, which means due to the government shutdown, we won't be getting Jolts, but I wouldn't be trading that anyway. I'm not a massive fan of Jolts. So the next tradable thing, Tuesday evening, which is interesting because of the time zone change in the UK, at 21:45, we'll be trading the New Zealand employment. So usually that comes within the twilight hour, where spreads are horrendous and it's too risky to trade. But we will have a 10-minute window to scout this before spreads go crazy again. So, could be something worth looking at. So a cut is all but priced in for the RBNZ at the end of the month. So I don't really see much change there. But with money markets so worried about the strength of the economy at the moment, a really surprising print either way could get traders excited. I will have a preview of this up Tuesday afternoon, but because it's quarterly data, it's labour data for the RBNZ or for the New Zealand economy, I think this could be a really nice trade. And the thing to worry about is we're only going to have maximum sort of 12-13 minutes to get in and out of this just because of the time. So if you're looking at holding long term, you can look at holding for a while, but I'll just be scalping and I'll be getting in and out before 10 o'clock. So just something to be wary of there. So that is for Tuesday. So on Wednesday, the morning's pretty quiet. There's a few bit of European stuff going on, but nothing tradable in my opinion. So at 1:15 UK time, we got ADP, an increasingly well-respected labour market metric for the US, especially with the US shutdown at the moment. US government shutdown, we haven't had any labour data, so ADP could be heavily watched. And also not getting NFP this week as well, so or we're not getting claims or jolts. So this is the main labour print for the month. Of course, we get some of the ISM labour surveys out, but nothing as concrete as ADP, and it is more respected now. Issue of ADP is the recent reaction. So if we just go to last month's reaction, so yeah, this was last month's reaction. Pretty dismal print, massive revisions. A massive miss below the minimum, and of course below the consensus. But this is the 5-second chart on the dollar yen, the most sensitive to labour information at the moment, and we had a big spike lower and not much after that. We completely reversed in the end. So, ADP could be worth a print, could be worth a scout going on last month's print, but I wouldn't be doing anything any longer. Just looking at the tradable print before that, which was a little bit nicer. So this one was for July. Again, we had another massive miss and a lower revision. And this was a 5-second chart on the dollar yen again. And we had, more of a substantial move that lasted over 10 minutes. So, this is my entry and this is my exit on this one. I could have probably got a bit more out of it, but I've got my certain risk rules I stick to. And, this is the money I took on this. So, yeah, we'll be doing a preview for this one, but it's only going to be scalping in my opinion, just based on previous reactions to the data. I don't think it's worth a longer term hold, but I'll be definitely be doing a preview for this one. So keep your eyes peeled for that. So at 2 o'clock GMT, we've got ISM services, which is obviously a larger proportion of the US economy, and could be worth a trade. So similar to the ISM manufacturing, we've got the US government shutdown. So, markets are gagging for some US data. Again, the issue is the same as the manufacturing is we need all the stars to align. So we need employment, we need new orders, we need the prices paid. We need everything to come in perfect for this to be a trade. So if we just head to the past reactions of ISM services, we can just see how messy it's been. That should be 5.6. I'll change that now. So yeah, we can just see how messy it's been. Real mixed stuff. I mean, this one would have been nice print for stocks with prices paid coming in lower and the rest coming in higher. But the last sort of 4 or 5 months have been pretty bad. The last tradable print was the 5th of May. So let's quickly have a look at that to see how that reacted. So yeah, this was the reaction on May the 5th. To be fair, it's a shocking reaction. We pushed up for 2 minutes, completely reversed, and we did push higher in the afternoon, but you wouldn't want to trade that. In all fairness, it was around Liberation Day, so around May time, April, May, data was reacting horrendously in market, so you can't really take that at face value. So I think if we do see a big enough reaction, a big enough deviation, it could be worth a nice reaction. Maybe a scalp, maybe taking some profit off the table and holding dollar longs or dollar shorts for a little bit longer. But yeah, we'll go into that a bit more in the preview. Heading back to the calendar, so that's Wednesday sorted out. Just going down into Thursday now. Got some wage data for the Japanese yen. Won't be bothering with that. Here we go. So Bank of England Thursday. So could be an interesting one. There's 7 basis points priced in so far and 60 basis points by this time next year. We've had some negative inflation data. We've had the retail consortium data come in low. So it is looking like inflation's starting to ease a bit, which could take pressure off the Bank of England, the holding rate so much. So this could be an interesting one. I'd either looking at trading a cut with some dovish language, or maybe sell the pound after a pop higher if we get a hold with some dovish language. So I'll be doing a preview for that one. My preferential trade would of course be a cut. I won't be looking to buy the pound. I couldn't think of anything worse at the moment, but yeah, either selling the pound on a cut and dovish language, or selling the pound after a pop higher if we get a hold and some dovish language, could be the right play there. So should be doing a preview for that one either Wednesday evening or Thursday morning for you guys. So just scrolling down into Friday. I think that's all it for Thursday. Yeah, so heading to Friday, we should have NFP, but obviously it won't be coming out. So we've got the Canadian jobs data, which is a favorite of mine. Love trading it. It's really profitable. Last month, not so much. We'll go into that in a second. But the Canadian economy's been looking pretty shaky at the moment. Inflation's been sticky for the Bank of Canada's liking. So, it'd be good to see where we are in the labour market. We had a few bad prints. We had a really good print last month. So it could be interesting to see where we come. Now, this one does usually react really well. We had a bit of a sketchy reaction last month. So let's quickly look into that now. So yeah, this was the print 4 weeks ago. So, massive beat on employment. We had an unemployment rate of 7.1, full-time employment 106,000, which is massive. The participation rate was higher, so you couldn't have really asked for better numbers in all fairness. Of course, the part-time could have been positive, but that's not a major issue. Look at the full-time jobs. The reaction was pretty dismal, to be fair. We had like a 3-minute drop and price completely reversed. I think I got out of this one with a small profit, but it definitely wasn't anything special. So, this was a disappointing one last month. For this reason, I will only be scalping this data. We'll go into it more on Thursday evening or Friday morning, but, this could be a really nice mover, but I just think after last month's print, we need to play it a bit more careful. We need to maybe lower our risk a little bit, maybe just risk 50% or maybe 2/3. And yeah, just keep it nice and easy. I always like to see data react well before I trade it. So when I get a reaction like this, it's always time for me to step away a little bit, either take a week off or take a month off trading that certain print, dropping risk a little bit, maybe keeping my stops a bit tighter, and just lowering risk basically. So that'll be my plan for Canadian jobs. But I do think it could be a good mover, especially if we see a massive miss. And then just heading back to the calendar. So in the afternoon on Friday, we've got the University of Michigan, with the inflation expectations being the main one to watch. Nothing I'll be touching, but it could be worth a trade if these come in nice and high. But again, yeah, nothing I'll be bothering with. I'm not a massive. I used to be a fan of trading this when inflation was a massive issue for the Fed, but after the Fed decision, not the last one, the one before, where they basically said, inflation's not a major worry for us. I won't be touching this with a barge pole. So good luck if you do. But yeah, for me personally, I'll be staying well clear of this one. So yeah, that's it for the weekend video. Again, just starting out with this stuff. So, we may have a bit of a teething period. There may be a few things I need to improve on. So if you guys have any suggestions, please send me a DM again. That would be great to hear any feedback, any questions, give me a message. And yeah, have a good week. Good luck, guys.